What's up, XRP Army? The Q1 2024 XRP Markets report just dropped like 10 minutes ago. It's live. We're going to deep dive into this detailed report in just a moment. So hit the subscribe, hit the like, links to everything's in the description. Notable market developments in Q1 include continued US demand for BTC spot ETFs, centralized and decentralized exchange volume growth, key regulatory and legal updates. Finally, technical blockchain upgrades, including automated market makers on the XRP ledger. And that's just the tip of the iceberg. So grab your snack, grab a drink. This is a long read, but we're going to dedicate strictly to this because it's so fresh. Q1 2024 XRP Markets Report. Very nice. Ripple publishes the quarterly XRP Markets Report to voluntarily provide transparency and regular updates on the company's views on the state of crypto markets, XRP ledger and XRP related announcements, and market developments over the previous quarter. As an XRP holder, Ripple believes in proactive communication and transparency and urges others in the industry to build trust, foster open communication, and raise the bar industry-wide. And I agree, it's okay for us to have civil discourse, but I also sometimes see XRP Army, small demographic, recycling decade-old news, or just being toxic and just having no constructive feedback at all. And usually the pains are rooted in price, as with any project. So it's important that we have positive communication, solution-oriented, even if we do complain. We need to foster more open communication for sure. Crypto market summary. There was no shortage of notable market developments in Q1, including continued demand for BTC spot ETFs in the US, centralized and decentralized exchange volume growth, key regulatory and legal updates, and technical blockchain upgrades. BTC ETFs registered total net inflows of nearly $12 billion, with cumulative trading volumes reaching $207 billion in just 3 months. That's massive. BlackRock saw net inflows of $67 billion across its 400 plus fund ETF range, and its iShares Bitcoin Trust IBIT notched roughly $13.9 billion, massive. Given the continued volume and inflows, it's clear that traditional institutional investors saw large asset managers as an entryway to access the crypto market. Well, there's no shortage in demand, and the natural sellers are less as a result of halving. Now, post-halving, guys, I alluded to the fact that we saw was true, that there's going to be lots of FUD. We're going to go sideways, maybe lower. We could tumble down lower, even though BTC is 66K. I got stables and fiat ready to scoop up altcoins like XRP and many more if we do enter some really good Black Friday sales. But it's great to see the massive inflow of capital. And I think for Ripple, I think that we will see a BlackRock ETF. I think we'll see many ETFs. I don't think Ethereum is any security, with Ripple choosing to launch its upcoming stablecoin with an announcement very soon in June on both XRPL and ETH. And plus what we saw with Ripple galvanizing the EVM sidechain, it's evident that EVM, Ethereum's here to stay. Life's unfair. Deal with it. It's no problem, guys. We don't need to do villain arc for no reason. That's just stupid, toxic communication that's not productive and not solution oriented. While crypto traders have previously utilized leverage to gain directional exposure, markets are undergoing a mini renaissance period. Key examples of this era of leverage and an uptick in demand include ETF authorized participants hedging their inventory on the CME, projects like Athena amassing $2 billion in delta neutral assets, and funding rates enter never before seen territory. As a result, participants like these are demanding more trading infrastructure to execute their strategies. In addition, as prime brokers, settlement networks and tri-party solutions become second nature in the market. The velocity of trusted assets will likely only increase. Notice that. That's a good way of viewing it. Tri-party solutions, trusted assets. There's a lot of trust that big names have. If it's just a TradFi guy's like, should I do this? Should I do this? Or just go BlackRock? Those names are established. They have authority, Grayscale, what have you. So it makes sense. The velocity of trusted assets will likely only increase, and trusted assets we think is not just ETF institutions, it's also names like Ripple. This is part of the narrative of Ripple, right? And it will just continue to mature and grow. And on that subject, Ripple, American-based stablecoin around the corner, ETH and XRP ledger, interchain, interconnected world with Axelar Network recently onboarding the Deutsche Bank to Project Guardian. There's so many going on, and the future is interconnected. The future is abstraction, and we see this time and time again. On a side note, I have a dedicated video. Brad Garlinghouse did call for a 5 trillion global crypto market cap by the end of this year. And he sees that easily conservative, we could see the global crypto market cap in the years to come head to $25 trillion and a 20x increase in just stablecoin market cap. And to what I said, he said that Tether plays an important role, but that the US is going after them. Two sides of the same coin. Not that it's going to implode Tether, because we need them to exist. They pedestal and they buy up the US dollar. They're an ad for the US dollar. It's pro-US dollar. We will see Ripple enter and eat some of the market share with their stablecoin and bring in more positive volatility. Those are the words of David Schwartz, not mine, even. The AMM, this stuff, monumental calls it Brad Garlinghouse to the stablecoin. Game changer calls it David Schwartz to the stablecoin. And reinforced with the AMM that needs more time to mature, I think we're going to see that positive volatility in the word of David Schwartz that we're looking for. Total centralized exchange volume in March surged to levels not seen since May of 2021 highs. Spot volumes jumped to 2.93 trillion in March, while derivatives volumes jumped to 9.1 trillion per CC data. Decentralized exchange weekly volumes also spiked to 40 billion, a 100% increase over Q4 of last year. XRP spot volumes, average daily volumes, surged to 865 million in Q1 2024, representing a 40% increase from Q4 of last year. Daily average XRP derivatives open interest was 500 million in Q1 of this year versus 460 million Q4 of last year. Spot volumes and open interest have continued to exhibit high correlation with general market activity, pointing towards robust XRP trading and activity across venues. Lastly, the industry saw several technical upgrades that helped lower barriers of entry for individuals and institutions alike into crypto, including Coinbase's plan to bring users fully on-chain via its wallet app and Ethereum's Dencun upgrade. The Ethereum Dencun upgrade generally, of course, was dramatically reducing the cost, the gas cost for L2s and whatnot, making improvements there. These upgrades, combined with Tier 1 asset managers stepping into the space to not just offer ETFs, but other securitized products, all point to a new chapter in the road to mainstream adoption. And again, guys, notice, no one's throwing Ethereum under the bus, but a few weirdos in XRP Army. The same with Cardano. I love Cardano, Ethereum, and XRP. And notice I'm not pointing one against the other. There's a symbiotic relationship with each other, and they can coexist. Is Solana epic and doing a great job? Yes. Do I use Solana? Yes. Do I have Solana? Yes. I've launched tokens on Solana to test and experiment. So this nonsense brokey shit of like, ooh, this is bad, this is good, this hero-villain arc nonsense is just some brokey nonsense. Forget about that. The SEC lawsuit against Ripple. And that's the thing. Ripple, in my opinion, is going to come out flying colors. I think that's the end of May is going to be very important. On March 22nd, the SEC submitted to the court their request for remedies against Ripple for its historic institutional sales of XRP. The SEC has asked the court for $2 billion, which comprises of 900 million in disgorgement, 200 million in prejudgment interest on the disgorgement request, and finally 900 million in penalties. The SEC has also asked for an injunction. Ripple filed its opposition to the SEC's request on April 22nd, so just less than a month ago, pushing back on the SEC's baseless request, arguing that the law does not allow for disgorgement or interest on disgorgement, where the SEC has not proven that anyone was harmed. Ripple argued that a penalty of no more than 10 million would be appropriate in a case that involves no allegations of fraud or recklessness. I mean, we're hearing it from Ripple then. They want no more than 10 mil. And also, where the SEC has not proved that anyone was harmed. These are key things. So the no more than 10 mil, that's the max, would be appropriate in a case that involves no allegations of fraud or recklessness. The SEC replied to Ripple's brief on May 6th. In terms of next steps, both parties will wait for the judge to make a determination on the final remedies, likely in the coming months. So we don't know. Likely coming months, could be June, could be July, could be August, who knows. Ripple remains confident that the judge will approach the remedies phase fairly. That gives us some good confidence. One, that they are cementing it like 10 mils the top. They've been going into this with flying colors. In case you didn't know, Brad Garlinghouse was also offered to walk away from this lawsuit and just put Ripple under the bus. He didn't. He stuck around. They're dedicated. They want to see this through, not only for Ripple, but a win for crypto as a whole. Global regulatory developments. Stablecoin regulation was front and center as EU regulators published draft regulatory standards under Europe's markets in crypto asset regulation, MICA, for stablecoin issuers. Due to come into force at the end of June, MICA paves the way for global stablecoin regulation adoption and will push the market to adopt increasingly stringent and more transparent compliance measures. In addition, Hong Kong introduced a regulatory sandbox for stablecoin issuers this year, and the BIS issued regulatory recommendations for global stablecoin arrangements. In the US, senators introduced a new stablecoin bill with the goal of creating a regulatory framework for payment stablecoins. So notice compliance first, enterprise, banking, June. We keep hearing June, Apex in June. So they are leading the helm, guys, of this. The Virtual Asset Regulatory Authority in Dubai granted a conditional virtual asset provider VASP license to Deribit. The Monetary Authority of Singapore, MAS, granted in principle approval for its payment license to OKX, and South Africa's financial regulator announced over 300 crypto asset providers sought approvals for a license in the country. In addition, AMS introduced amendments to the Payment Services Act, bringing activities such as crypto custody services within the regulatory perimeter. Now, when I see MAS, I saw when Xrpl was mentioning MAS working with Project Guardian. Xrpl, back in February, Ripple announced a partnership with to extend the interconnectedness, and we know the future is interchain. We know the future is interoperability. Meanwhile, in the US, the SEC appears to be opening up new battlefronts in its war on the crypto industry. And on that subject, guys, Brad Garlinghouse highlighted that businesses and institutions, they have a lot to lose. They don't have infinite bankroll, but Gary Gensler doesn't care. He's been going in reckless because they have infinite bankroll. Doesn't matter for them if they want to drag it out 10 years, 5 years. They will always have their salary. It's not like they take a pay hike, right? It sucks because the burden is all on the company. And they get scapegoated, in this case Ripple, but I think they underestimated Ripple. Reportedly investigating ETH and issuing subpoenas to US firms over their interactions with the Ethereum Foundation. Subsequently, Consensus sued the SEC, that's the parent company of MetaMask, over its power grab over Ethereum, citing regulatory overreach. The SEC reportedly also sent Wells notice to Uniswap and Robinhood. Robinhood was pissed. They were, again, very assertive in response to that. In its lawsuit against Coinbase, a judge denied parts of Coinbase's motion to dismiss at this early stage of the proceedings. The court was required to accept all the SEC's allegations as true and found it plausible that Coinbase was acting as an unregistered exchange for certain tokens that may be security. This is ridiculous. Ripple, Ethereum, Uniswap, Robinhood, Coinbase. This is ridiculous. Like, it needs to end, and I think they're doing this to make us have max fear until they already know they're going to adopt it all. Additionally, the court suggested that Coinbase's staking services may constitute as unregistered security transactions. However, the allegation that Coinbase's wallet acts as unregistered securities exchange alone failed, leading to its dismissal. As of the date of this report, Coinbase is seeking permission to appeal the adverse rulings. If it wasn't enough there, Binance, KuCoin. The DOJ charged KuCoin and its founders for violating anti-money laundering laws, while in parallel, the CFTC charged KuCoin for operating an illegal digital asset derivatives exchange. FTX founder and former SEO Sam Bankman-Fried was sentenced, of course, to the 25 years in prison for his conviction on 7 different fraud and conspiracy charges. And of course, Binance's CZ was sentenced to 4 months. Now, that was reduced drastically, but I still think it's stupid that CZ is spending time in prison. I don't think he is doing the time yet. And hopefully they put him in like a white collar one, but like it's just stupid. This is absolutely ridiculous that we live in today's society where we have catch and release for blatantly terrible criminals, and then we throw CZ in jail. It just makes no sense. Make it make sense. It doesn't. Deep dive into the XRP markets. For this report, Ripple uses market metrics from public sources, including CC Data, Bloomberg, and Refinitiv Econ. What is that name? Chart 1. The low point in the quarter for XRP's price occurred in mid-February and peaked in March. The realized volatility showed a gradual decline, racing its bottom of just above 40% in February, and then increasing quickly in March despite the price increase towards the end of Q1. Volatility levels remained elevated above 90%, and we can see here, if you guys scooped up here, well done, Chads. This, of course, was last year, July, Judge Torres. Right now, we're kind of stabilizing. Yes, you can make a joke that this is the Ripple's second stablecoin since we've been doing 50 cent in the club. But good things take time, guys. Patience. Table 1. Major tokens in price and volume. End of Q1 figures. USD prices and average trading volume reflects daily trading activity for the USD and stablecoin pairs on top-tier exchanges. So we can see here the assets, the 7-day average, 30-day average, 90-day average, and 365-day average. XRP's up there. XRP's up there, guys. I mean, there's clearly volume. We have a lot of volume, which is nice. I mean, I'm surprised that we even did more than BNB for volume. So money is there. Demand is there. Community is strong. Brand is there. Charismatic leadership is there. In my opinion, none of my videos are financial advice. It's just entertainment. But I think it's really stupid to be selling in paper hands, selling the XRP right now. I mean, if you did it when Solana was $9 and you bought that, great. But a time and place for everything. Chart 2, XRP spot exchange volume. Binance continued to account for a significant portion of the volume, while contributions from different exchanges vary. Coinbase, Bitstamp, Upbit also combined for a significant percentage of volume. These exchange names, man. Bit this, bit that, bit plunger. In the end, there's not going to be a lot of centralized exchanges. There's so many clown exchanges. XRP spot exchange volume. And we can see an increase, which is good. Very nice. Very good. Chart 3, XRP volume distribution across exchanges remained fairly constant through the first quarter of the year, with Binance, Bybit, and Upbit responsible for well over 70% of the traded volume. All right, so take with that a grain of salt. The percentage share of volume traded through fiat pairs in Q1 declined from 15% in Q4 to 11%, so a 4% decline. The majority of XRP trading activity is currently against USDT, and Tether is important, guys. I think this is what I would say. USDC, these nuts. USDT, these nuts. And what's coming soon, and if it does end up being this ticker, which I predicted, I will call myself the official, unofficial XRP commander. USDR, these nuts. And that'll give me the trifecta completion. XRP spot trade volume, fiat pairs versus stablecoin pairs. So, yeah, so we can see, I mean, like people are trading that heavily against stables. That's why we see stables are important. We can see the line there doesn't lie. The state of the XRP ledger. So XLS30 goes live. Last quarter, after a vote approving the amendment, XLS30 went live on the XRP ledger mainnet, adding a non-custodial automated market maker, AMM, as a native feature to the XRPL's decentralized exchange. Now, guys, for history, the DEX is basically one of the most OG DEXs. It's native to the XRPL, and when you use platforms like Sologenic or what have you, it just taps into that existing DEX on the ledger. And they're more of like a UI, if you will. AMM is bringing enhancements to that. And though we wanted to see this much earlier, we could have had it earlier if it wasn't for the Zahao guys also causing mutiny, which shows there is decentralization, but they were cheesed. They didn't get their stuff, so they're voting against it. That caused delays. And I do think that a lot of this stuff is because the reason why it's late, NFTs, AMMs, is because they've been focusing on compliance, banking, all that stuff from the beginning. So a lot of this stuff was like just put into also like as stopgaps as we move forward. I think moving forward, a lot of this stuff's going to get polished. This new feature was designed to provide on-chain liquidity, trading capabilities for DeFi developers and users, aggregating order books and liquidity pools at a protocol layer to facilitate the best price execution. And that's key, right? At a protocol layer. It's not like housed in this pancake swap they're doing it, right? This is everything that we're discussing this is protocol level, which is something that's different. And this is why you don't see decentralized exchange trade volume for a native token on Xrpl on CoinGecko or CoinMarketCap. I hope we can get that because that's hurting the marketing, in my opinion, to Xrpl projects. Note, shortly after going live, members of the community discovered a bug affecting the AMM functionality, which prompted action from community developers and the Ripple X team to address the issue. Interesting they say this. I remember that bug, but did they ever actually detail what the bug was? Because I know the fix came out fast, but they said that they're going to show us what the bug was in some level of detail, but maybe they didn't. I don't know. Xrpl integrations, Axelar. So this is key, guys. Axelar announced its integration to the XRP ledger, driving interoperability and expanding Xrpl's feature to over 55 blockchains. The integration will enable developers to execute calls on smart contracts, facilitating the cross-chain deployment of decentralized applications on the Xrpl. In addition, Zonix. Bro, who's making these names? They suck ass. What the hell, Zonix? Who's making these names? What is this name? Refund that name. They announced their plans to streamline the tokenization process for real-world assets with its integration of the Xrpl, and Orchestra Finance went live on mainnet. I mean, I didn't like Orchestra Finance. Finance kind of looks like ass. And you know, guys, I have to keep it 100. A lot of these front-end UI platforms, they look like shit for Xrpl. So please, vamos, yalla. Come on, rapido. Make better stuff that looks like Uniswap and PancakeSwap. Because frankly, a lot of these UI look like trash. Lastly, EasyA launched educational modules and initiatives to onboard its community of over 750,000 developers onto the XRP ledger and its Ethereum virtual machine compatible sidechain. This will allow developers to more easily build decentralized applications with smart contract capabilities on the high-speed, low-cost Xrpl. And there you have it, folks. Why would they care about Ethereum and then it's a security at the same time? Don't believe like just some randos on Twitter Spaces. Just listen to Ripple. Just go right to the source. On-chain activity. Last quarter, on-chain transactions increased by 108%, and average cost per transaction decreased by 45%. Average transaction fee reached a high in December due to widespread testing of inscriptions on the Xrpl. As such, the decrease in average cost per transaction indicated a reset in that no network congestion occurred in the quarter. Because that was one of the concerns people had. Network congestion. Is it going to do this? Like, is the AMM going to overwhelm this and that? Which I think was all bollocks because they didn't get Zahao and then it resulted in their fork and they can do with that whatever they want. For future reports, AMM volume will be included in the volume on DEX. So we can see here on-chain activity. We have a few columns here, Q4 of last year, Q1 of this year, and the growth. So 108% increase in transactions. We have 101% XRP burned for transaction fees. In case you guys didn't know, it's a very low-key underrated thing. XRP does burn. It is deflationary, albeit small amount, but with crazy influx of XRP, we could see a lot of XRP burned. So keep that in mind, right? Almost 700,000 XRP burned. Average cost per transaction in XRP went down almost 50%. Average XRP closing price about the same. Average cost per transaction in USD down almost 50%. Volume on DEX up 5%. Trust lines down minus 0.6%. Number of new wallets is down, but these are very small numbers. At least the stuff that's important like transactions and XRP burned has been increasing. Feature spotlight, auto bridging. Auto bridging is a feature on the DEX that utilizes XRP as the native currency to facilitate trades between any two assets on the XRPL. As the native currency on XRPL, XRP is inherently counterparty free. Auto bridging capitalizes on this by automatically considering XRP as a bridge currency to find the most efficient trading route across assets. Auto bridging works in conjunction with the XRPL's AMM function that went live on the mainnet. When an AMM trade occurs on the XRPL, it can create compatible trading offers for the auto bridging feature. As such, AMMs increase available trading offers for auto bridging, while auto bridging expands AMM's liquidity access. As XRPL adds assets and applications and AMM usage grows, auto bridging will play a pivotal role in enhancing ecosystem functionality and interoperability. Right? That is the future, guys. For the angry guys who always spread FUD and nonsense, Ripple's XRP holdings. Ripple's reports information about its XRP holdings at the beginning of the quarter and last day of the quarter. Its holdings fall into two categories: XRP that is currently has available in its wallets, and XRP that is subject to on-ledger escrow lockups that will be released each month over the next 42 months. For this latter category, Ripple does not have access to that XRP until the escrow releases it to Ripple on a monthly basis. The vast majority of the XRP released is put back into the escrow each month. Total XRP held by Ripple, and we have here a juicy, it's a pretty big amount, 5.077 billion XRP. Total XRP subject on ledger escrow, 40.7 billion. And we can see, what do we have there? Like 3 months, 3 to 4 months. Total held. It only went down 200 mil. 237 million? Something like that. Total XRP subject to on-ledger escrow, 237 million, right? So if you do the math, 237 million, half of that $100 million, they're just drip selling. They're not dumping on the chart. I think people don't realize that the upside volatility is not Ripple dumping. They're just keeping their operations ongoing and funding, but it's because we need more positive volatility from goods, services, and I think that's around the corner with the stablecoin and everything else that Ripple has going for it. So good read here. Nice to go over this report. What do you guys think? I'm really happy with what they've said about the SEC. I think the SEC part was very juicy. There's some interesting insights in here. And yeah, I don't think the SEC, I think what they said is key. The judge will approach the remedies phase fairly. And I think that's next. Next for us, XRP Army, is getting out of this SEC nonsense. It might be before, it might be after the stablecoin stuff. And then, of course, stablecoin is going to be one of the biggest things. I think people still underestimate how important stablecoins are to the growth of the DeFi sector. And everyone always wants a stablecoin. Let me know what you guys think about this report. Very juicy report, well written. Nice one by Ripple. Links to everything's in the description. Hit that subscribe, hit that like. I'll see you guys in the next Angu Crypto Show.